Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. I bet you're watching this because you're looking for some value stock ideas. If you are, you've come to the right place, because Tracy Reinick, our value stock analyst at Zacks.com, favors us once again with a couple of more value stock picks, starting with the Bank of Montreal,
Yes.
BMO, the ticker symbol. And just a cursory guess on my part, but they're in the banking business.
They are. They're a big Canadian diversified commercial personal investment bank. They were founded in 1817, so they've been around a while. They have beat estimates 2 quarters in a row, which is pretty impressive for the banks right now. They are profitable. They are making money. They have had some issues that we've seen with some of the other banks in terms of credit losses. This last quarter, they had to raise their credit loss limit by a little over $100 million to $372 million. And mainly that's because their U.S. loan portfolio is not performing well. The Canadian one is doing much better. They just do business in North America. So
they're based in Canada?
Yes. Headquartered in Canada, in Montreal.
So do they have the same capitalization requirements as other banks here in the U.S.?
No, they're not under any kind of the TARP program or anything like that.
Okay.
So I'm not sure what the Canadian government is requiring of them. But right now, they're doing pretty well. Like I said, compared to a lot of the other peers in their industry. Like I said, they are making money. They did beat estimates, and their earnings are rising for the full year. They're trading at not super expensive, a little over 11 times earnings, so that's not bad. But the stock, as we've seen with a lot of the financial stocks, has doubled since February, actually. And, that's a little bit dicey in this kind of market, given that now they're not quite as cheap as they were before. But, the estimates are there. The earnings are there right now. A lot of what is the bad stuff that's known out there, they've been talking about, like with their loan portfolio. But they're seeing revenue increase in their deposits and through their regular personal loans and business loans. They are loaning money. So, there's some good things with their story right now. And if you're looking for a financial, it might pay to look outside of the U.S. Realm and look at some of these banks that are in other countries that didn't take quite as many risks as some of the U.S. banks took.
Okay. And then you also are talking with us about AANs.
Yes.
AAN, the ticker symbol. They are in the retail space.
They are. And, I've been talking about a lot of the retailers lately. And this one is very interesting because they do rent to own. And they really killed it this last quarter because apparently if you can't get credit to go out and buy the computer or the television, you will go to something like a rent to own company like AAN's is and rent it instead.
That's interesting because I would not automatically think that was a cheaper way to go.
No, you wouldn't think that. But if you really want certain items, this is a way to obtain them. Mm-hmm. And they saw customer traffic in their stores increase 20% this last quarter, which is incredible given what's going on out there. Their same-store sales were up 12.3%, which is also huge. They're in 48 states and Canada, so they're seeing it, across all geographic areas.
So is this specialty retail?
Yeah, I guess you could call it that. I mean, it's kind of its own niche.
It's not the dollar players.
No. They're not in that. They're not the discount. They, do rent to own through with computers and furniture. They do office furniture, those kinds of things. So it is a specialty area, though, for sure.
Okay.
And, I think investors didn't really know what would happen with this kind of company in this kind of economic environment, but now we're seeing what's happening. I mean, they really killed it in terms of record revenue. This last quarter was up 15%. And, obviously the estimates are all rising because they did raise guidance for the quarter quite sharply, given the beat. They beat by quite a bit in the first quarter. So
raised it to $1.90 from $2.05? Or to a range of $1.90 to $2.05.
Yes, from 172 to 187. So that encompasses some of this recent beat in the first quarter. But these are all positive things given what's going on with the traffic they're seeing at their stores.
Sure.
The stock isn't super expensive. It's trading a little bit under 15 times forward earnings. So it has leapt off a little bit off of its lows were in February actually for them, and so. It hasn't doubled, but it did get a big boost. It's kind of pulled back a little bit here. Like I said, it's not that expensive given what's going on with the company.
And it even pays a small dividend.
It does, yeah.
What more could you ask for?
I know, 0.2%. So, yeah, you get a little bit of dividend. the company is seeing a lot of positive things for a retailer in this environment that is, like we were talking about with the dollar store type of areas, the discount retailers, and then this kind of rent to own. Yeah.
Okay. Do you own either of these two?
I do not.
You want to talk or see more about what Tracy's talking about as far as value stock picks are concerned, you can see her articles over at Zacks.com's homepage. In the upper right-hand corner of that homepage, next to the value listing, the value category listing, you click on that current headline that's there, and it'll take you to her current stock that she's writing about, or she's written about, and an archive of some others as well. With Tracy Rennick, I'm Terry Ruffalo.